SoFi Technologies just wrapped up another trading day, and while the price movement might seem minor on the surface, there's a lot happening behind the scenes that serious investors should be paying attention to. In this detailed breakdown, we're going to explore SoFi's latest price action, institutional behavior, unusual volume activity, what's happening in the options market, and what this could all mean heading into earnings. Whether you're holding SoFi long-term, trading it short-term, or just following it out of curiosity, this is one update you won't want to miss. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. So SoFi closed down approximately 1.44%, landing at a daily low of $21.17 and reaching a high of $20.58. While this price fluctuation might seem unremarkable, the dynamics surrounding it were quite unusual. During the pre-market hours, there was a general sense of optimism. Many were expecting SoFi to make another attempt at testing a key resistance level. But as soon as the main market opened, institutional investors made a move that completely changed the tone of the day. One major sell transaction involving approximately 6.81 million shares initiated a shift in momentum. That single event led to a broader pullback in price, even though the overall drop was relatively modest. What's important to note is that the day's total trading volume came in at just about 40 million shares, which is significantly below SoFi's average daily volume of 72 million. And it wasn't just SoFi seeing low volume. This trend was visible across the broader market as well. A lack of macroeconomic catalysts combined with zero significant company-specific news meant that traders didn't have much to act on. There were no new filings from the SEC, no headlines or press releases, and no scheduled SoFi media appearances. In short, it was a quiet day, and quiet days often lead to low-volume, indecisive trading. However, there was one curious moment worth mentioning. Former President Donald Trump was reportedly seen chatting with Federal Reserve Chairman Jerome Powell, and during that interaction, Trump hinted that Powell might lower interest rates. While this may not seem like a major revelation and wasn't widely covered, it did have a small impact. The market didn't react overtly, but the probability of a 25 basis point rate cut in the Fed's upcoming September meeting did rise from 58.4% to 62.4%. That subtle increase could indicate that some behind-the-scenes investors are pricing in the possibility of monetary easing. Meanwhile, short sellers appeared relatively inactive today. Around 282,000 shares were returned, and the short interest sits at 11.68% of SoFi's free float. This translates to about 126.73 million shares currently being shorted. Notably, a report from NASDAQ disclosed that between June 29th and July 14th, approximately 20 million more shares were returned by shorts than previously expected. Much of that short covering activity happened in dark pools, private exchanges that allow institutional players to trade large blocks of stock without revealing their identities or intentions to the public in real time. The downside of this system is its lack of transparency, but it also helps explain some of SoFi's upward price momentum in recent days. While today didn't show any unusually large dark pool activity, it reinforces the idea that some shorts are quietly unwinding their positions ahead of earnings. Turning to the options market, we saw some interesting dynamics play out. A total of $29 million in call options and $5.2 million in put options were traded today. This may seem like a bullish skew, and it is, but about 42% of the total options volume leaned bearish in sentiment. Compared to just a few months ago, when total options volume might not have even crossed $7 million on a typical day, this level of trading activity shows that SoFi is firmly on the radar of institutional and retail traders alike. This increase in options trading adds liquidity and reflects growing interest in how SoFi might perform in the coming weeks. Looking closer at the open interest data, the bullish camp seems to be eyeing a potential move up to $25 by the end of next week, likely influenced by the upcoming earnings report. On the bearish side, expectations are more conservative, with a targeted range between $16 and $17. However, because SoFi closed the day below $21.50, many call options lost their value. That includes 15,000 contracts at $21.50, 24,000 at $22, 40,000 at $22.50, and 18,000 at $23, all of which expired worthless. On the bright side, roughly 38,000 in-the-money call options remain active, which may support a mild bounce at the start of next week. But with no major catalysts on the immediate horizon, any such move would likely be technical rather than sentiment-driven. From a support and resistance standpoint, SoFi closed between the S2 and S3 levels, with $20.99 acting as key support and $21.24 as a resistance level to watch closely. Despite the relatively calm trading day, the stock did exhibit notable intraday volatility, moving between these important levels. It's an indication that traders are still reacting quickly to price movements, even in the absence of big news. Now, with earnings just around the corner, expectations are mounting. Analysts have forecasted revenue of about $803.11 million, and the general consensus suggests that if SoFi doesn't beat these projections, we could see a potential downside of nearly 19.5%. Interestingly, no analysts have adjusted their revenue or earnings per share estimates over the past 4 weeks, and no new ratings, positive or negative, have been issued in that time. This lack of movement in analyst sentiment is quite rare, especially so close to earnings. It may suggest that institutions are waiting to see results before taking a firmer stance. What does all of this mean for SoFi's chart and technical indicators? Despite recent pullbacks and some erratic trading sessions, SoFi continues to trade above major moving averages and remains in a bullish supertrend pattern. Even better, the recent volatility has helped reset the stochastic RSI, putting SoFi in oversold territory heading into next week. This could pave the way for a bounce, especially if positive earnings data supports it. With several large cap companies set to report earnings next week alongside SoFi, we may see a sharp increase in volatility and trading volume. In conclusion, while today might have looked like just another slow day on the surface, there are several factors quietly shaping SoFi's next big move. From institutional positioning and dark pool activity to options speculation and macroeconomic rumors, it's clear that something is brewing. As earnings draw near, all eyes will be on how SoFi delivers, and more importantly, how the market reacts. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.